Hello everyone, Maurice here. Welcome to Things Invest, where we're going to talk about investing, finance, and professional development. For today's video, it's for entertainment purposes only. The investments we're going to talk about today will be Bitcoin and Ethereum. As you know, across today on a beautiful Sunday in New York City, as of earlier this morning when I was going to the gym, I noticed that on my way to the gym and checking my Coinbase app, I can see that on Bitcoin and Ethereum, it's been experiencing more of a sell-off again, right? So it's been subsequent sell-off for the last couple of days so far. On Bitcoin, it's down about 11%. Ethereum currently down about 17%, and I believe at one point about 18.5%. So I'm gonna go through a technical analysis to see how are we trending going forward. This is more of like an impromptu emergency video because I know that a lot of people care a lot about this. So I want to quickly hop on the camera to show you guys how we're trending accordingly and what are the supply and demand dynamics are shaking out right now in the market as a whole. I'm gonna give you the resistance level to look out for and also the price level that we should be looking out for 2021 year end as well. So stay tuned, stick around, let's make some money. Right, so quickly going over the technical analysis, and I'm going to go over Ethereum first. So look at that historically. You could see that ever since last couple of months so far, we were trending around the low 1370 starting in February, and ever since that we consolidated, and we had this rally because of the Coinbase IPO that we were anticipating, and also at the same time, you could see that we had this slow pump of starting in April 24th all the way to the peak of May 12th, and this was basically the anticipations for the SNL show that Elon Musk was debuting with respect to the Dogecoin adoption. That subsequently we had that euphoric pump, and that had a lot of market correlations on the supply and demand dynamics that subsequently propelled. And also at this time of the year, we had a lot of positive media affectation with respect to the Bitcoin utilization and adoptions across the world with respect to NFT adoptions and also the popularity that has been gaining so far on across all media publications and coverage, which subsequently drove this increased demand for this for the price of Ethereum. And those also on top of that, Ethereum is a relatively lower price point in comparison to Bitcoin, in terms of like the affordability and the price sensitivity level as well, which subsequently drove up the price all the way here. And you could see that the balloon basically popped around the May 12th time period. And the reason because of that is the SNL debuts that Elon Musk has talked about with respect to Dogecoin utilizations, which, gave a lot of lukewarm perceptions and obviously affectations across, publications and also with respect to public consensus as well. That subsequently drove the major sell-off, starting from Bitcoin to Dogecoin, and then subsequently have a drag effect to the Ethereum as well, knowing the fact they are, three of the most prominent cryptocurrencies that people talk about, and also on top of Cardano as well, right? And subsequently drove down all the way, and you can see that a major whale sold at this moment on May 16th, and subsequently drove some sort of a consolidation because of the consolidation that we formed on the 6th, basically before the whole pumped from the SNL show. And subsequent to that, we had more retail investors selling with a combination of like 75% of corporate seller, large institutional big whales, and also with respect to the smaller investors as well in combination. And subsequent to that, because of the fact there is no gap that we had formed historically, there was no resistance level that we had formed. It was just all up and away, majorly combined with a lot of a consolidation with a lot of retail investors instead of just like corporate investors, which you could see that the volume here was relatively low and the candles are relatively small as well, which gives you an indicator that this was just mainly driven by public investors. That subsequently, the big whales saw a huge gap that was about to fall, and they immediately sold down. And with respect to this big whale, it sold down like I would say multi-billion dollars worth of Ethereum, and subsequently drove that sell-off all the way down at one point, hitting about like the 1850 level, which is a strong resistance level that we formed historically around here, which makes sense, right? And ever since then, we had some small retail investors bought in because they thought that was the dip, but the dip was relatively, not solidified because this was basically an algo trade that was done by a computer, driven by the Bitcoin reversal that we have had. If you can take a look at it right here, the reversal was basically timing around here, which subsequently made some drag effect onto the Ethereum price point. And with respect to Ethereum price point subsequent to that, because the fact that there was no consolidation and no foundational level that formed, that subsequently, made a huge sell-off subsequent to that. And ever since then, because of the fact that there was no support that we had formed here historically, and the support was relatively shallow, if you could see that, there was one peak, and then there was like a small peak of of a pump, but that was subsequently drove to a sell-off. So that means there was a lot of bearishness with respect to the appetite and the demand for this price level, and that subsequently drove more of a sell-off, right? So we broke through basically 3 resistance levels so far, 1, 2, 3 so far, and currently we're going down even more. And the reason that we're kind of hovering at this moment right now at the $1,900 right now is because of the consolidation that we've had historically, right? If you look at around like this level here with these like 1, 2, 3, 4 candles, 5, 6 peaks right here, and 7 peaks. So we have had 7 peaks so far. So we're currently hovering around like the 1960 level. However, the peaks are relatively shallow, as you can see again, right? They're not really formed by long durations of consolidation. And the more solidified consolidation level is really coming down all the way here, right? Around the 1850 level. So I actually foresee as a little bit more of a sell-off going forward, because the consolidation that you could see here, right, with the combination of these candles, kind of like a mixed batch of green and red, and also look at the MACD right now, it's more fused together, so that shows a lot more stability in terms of the investors' appetite. So I actually foresee us to go down a little bit more to the 1850 level, retesting that again, and subsequently we should see some of a rebound from there. And I think the likelihood of that would be 50-50 at the moment, right? And the reason is because like the consolidation level that we're currently at right now, we're basically hovering between these green levels, which is not really any substantive consolidation again, right? We don't really have much ground to hold on. So we're just kind of floating on air at the moment, right? If you look at the chart based on the supply and demand dynamics as a whole. So we should see more of a sell-off down all the way to the 1800, 1850 level, and then slowly rebound from there. And then if we break that, I think the likelihood of like breaking the 1850 will be relatively low, because of the fact that we have such strong consolidation, and also on top of that we have 1, 2, basically like 12 consolidation peaks here and there on a minimal level. And also on top of that, we have sold off so significantly right now. We have down by close to about 60% from all-time high already. So the MACD is already, highly dragged down. With respect to RSI, is highly oversold right now. But it's gonna take some more time, right? We're still not completely there, right? So I think the best case scenario will be reversing somewhere around like the 1850 level, or worse, like around like the high 1700 levels. That should be the strong resistance level that we should be reversing, knowing the fact that we have formed such high level of consolidation for how long? Let's see, right? All the way from January all the way to somewhere around like the March 30th level. So basically like a 3 months of durations of consolidation before this whole pump up. So I feel pretty good about like if you were to buy in around these levels right here, and further, dollar cost average and further build up your position for long-term gains perspective, because I think the reversal should be relatively sharp. However, to test the all-time high again, if you're asking me like, oh, when are we going to go back to the $4,000 level? I think because of the fact that we took about maybe a month to do so, it's going to take about like 2 to 3 months or half a year tops for us to get back there, because whatever goes up really fast comes down really fast. But it's going to take about 2 to 3 times more effort and market adoption and utilization for us to go back there, because this was basically driven by a lot of emotions, but without a lot of substantive utilization as a whole. So that was basically a non-substantive pump in terms of like a supply-demand perspective. So for it to be actualized, in a logical perspective, it's going to take time, right? Good things takes time overall, and that's what's going to happen. And what I see going forward in the next 2 to 3 months is that the MACD line is going to slowly cross back up, slowly, because we are oversold on all levels right now, and we are basically very close to reversing now. So buying now at the moment wouldn't be too surprising to me. I think that's a fair investment in terms of a risk appetite with a major reward upside. So the downside here, we're gonna see another maybe 5 to 10% of a sell-off at maximum. I don't see another 45% because like that would be just pretty much out of the logics at all. I think by the time we get down to like, you know, possibly the 1850 or even like again, right, the 17, which I think that by that time will be just highly too much oversold, that we should be reversing from there. And then eventually the RSI is going to reverse up because of the fact that this is so much downward pressure that the inertia is going to propel back upward, right? We are basically in the submarino level right now, and as you go down to the ocean further and further, the pressure is going to, you know, increase dramatically more, and it's going to basically crush this and it's going to propel it upward like a rocket ship. But the rocket ship's going to take some time for us to internalize the pressure and eventually going to go upward from here. So I would say right now is a good level to buy in, and I'm still very bullish on the long-term aspirations and the net perspective of the Ethereum can provide from here. So just to recap on all the numbers that we talked about today with respect to Ethereum first. So right now, I think around like the $1,900 to $2,000 level will be a fair price point for you to get into. But just know the fact that, you know, we are close to being around like the 1850 level, which is a very strong solidified resistance level that would form 7 times historically. So that's a very good price level for you to get into. If you want to build a long-term position from there, knowing the fact that we basically down by like 65% from all-time high right now, that's a pretty crazy outlier in terms of the logic and the supply and demand dynamics again, right? And if we get down to even more of a further downsell to the 1750 level, I think I would just probably, you know, again, buy more, like maybe 10 Ethereum all straight up at once. Because by this level, this will be just highly oversold on all levels in terms of logics, in terms of supply and demand dynamics, in terms of MACD, in terms of RSI, which we saw all oversold on all levels. And I think if you think about this in a long-term macroeconomical perspective going forward, this is going to be more utilized going forward. And with the supply and demand imbalance that we're going to be getting going forward, this is going to pump up the price significantly going forward. And again, right, with respect to the price target, I think $5,000 wouldn't be surprising to me, knowing the fact that we tested the 4,400, you know, within like a couple weeks. That $5,000 by year end would be a conservative case in my perspective. I think we could totally pass through that. I think year or two from now, like hitting the 5-digit about like $10,000 per Ethereum wouldn't be surprising to me. And if you're to buy in now at the $2,000 or the $1,900 level, this will give you 150% gains, 2.5 times your return. All right, so that's it for today with respect to my technical analysis and updates on Ethereum. Really appreciate you guys for dropping by again. Hopefully you guys, you know, don't feel so scared. You know, this is a logical occurrence. This is supposed to happen. We're just going through with the cycle right now. You know, cryptocurrencies or any commodities don't go up and away for no reason. It needs to go through a normal cadence of logics and supply and demand dynamics, and that's what's exactly what we're going through right now. So hopefully you guys are, you know, feeling a little bit better on the projections going forward and the analysis that I give to you guys to, you know, hopefully give you a peace of mind, obviously, right? Please hit the like button, the subscribe button, also the notification bell to watch out for my next video. Thank you so much again.